Insurance is quietly becoming one of the most expensive what-ifs in everyday life, and more people are deciding to roll the dice instead. But here's where it gets controversial. Some of the very policies people are cancelling are the ones that could save them from financial disaster. The kinds of things you can insure today seem almost endless: houses, health, mortgages, pets, funerals, and more. Instead of shrinking, this list keeps expanding as companies find new ways to monetize our fears and uncertainties. And this is the part most people miss. Even as options grow, so does the pressure on household budgets, forcing people to make tough decisions about what to keep and what to cut. In New Zealand, the annual cost of insurance has blown out to more than $16 billion, and many households are responding by trimming cover or walking away from some policies altogether. A growing number of people are taking the risky route of self-insuring, essentially choosing to carry the financial risk themselves and hoping nothing major goes wrong. On the surface, it looks like a smart way to save money each month, but the stakes can be brutally high if disaster strikes. Consumer NZ's head of investigations, Rebecca Stiles, says their yearly surveys show more people are cancelling insurance completely because they simply cannot keep up with the premiums. For many, it is not that they do not see the value in being insured, it is that the cost has climbed beyond what their income can realistically support. The most alarming trend she sees is people letting their house insurance lapse, leaving their biggest asset unprotected. The share of homeowners who have cancelled their house insurance policies has risen sharply, from about 7% in 2022 to 17% last year. Stiles notes that their 2025 survey is still being analysed, but she would not be surprised if that cancellation rate nudges higher again. This is happening even though, for most people, losing a home to fire, flood, earthquake, or other disaster would be financially devastating without cover. Ironically, the very events that are driving premiums higher, severe storms, floods, and other extreme weather, are also the reason experts say dropping house insurance is such a huge gamble. In recent years, climate-related disasters have shown how quickly a safe, insured life can become a financial nightmare for those who lack protection. Yet when budgets are under pressure, it is tempting to take that risk and hope to be one of the lucky ones who never need to claim. The detail takes a closer look at what people are doing to cope with soaring premiums, and some of the strategies are both creative and controversial. Some are increasing their excess to make premiums cheaper, others are downgrading cover levels, and some are cancelling certain types of insurance entirely. The big underlying question is, at what point does saving money today turn into betting the house on tomorrow? Numbers from the Insurance Council show a steep climb in how much New Zealanders are spending on general insurance, from $6.9 billion in 2020 to $10.7 billion just a few years later. That is a massive jump in a short time, and it reflects not only more claims and higher risks, but also rising rebuilding costs and broader inflation. For the average household, all of that translates into noticeably higher bills year after year. On top of general insurance like house, contents, and vehicles, there are life and health policies, which have also become more expensive. Figures from the Financial Services Council show that spending on life and health insurance combined rose from $4.58 billion to $5.73 billion over the same period. When you add everything together, it becomes easier to see why some people feel like they are paying a fortune just to protect against possibilities, not certainties. Bianca Russell, who spends hundreds of dollars each month on multiple policies, puts it bluntly, where does it all stop? How many costs in my life are basically placing a bet on the what ifs? For her, insurance costs have become a major line item in the household budget, competing with everyday essentials and lifestyle choices. Her question captures a quiet frustration many people feel, but do not always say out loud. Russell is 47, a former Olympic hockey player now living in Auckland and working in middle management. Her background in elite sport, combined with her current high-risk and pricey hobbies, makes her feel that going without cover would be reckless. In her world, injuries, accidents, or expensive equipment mishaps are not just theoretical, they are genuine possibilities. Ahead of speaking with the detail, she did a fresh review of her policies, and was stunned by what she found. Even though she had a sense that insurance was expensive, seeing all the premiums lined up together highlighted just how much of her monthly income they swallow. It is a feeling many people recognize when they finally add up all their different policies. She jokes that she is permanently broke thanks to her bougie lifestyle, but despite the humor, she remains committed to keeping her insurance. For Russell, the key motivator is not wanting to become a financial burden on her family if something serious happens. That mindset raises a provocative question: is paying high premiums a kind of personal responsibility, or are people being guilt into overinsuring themselves? Since 2000, insurance has seen the largest price increase of any category measured in the Consumer Price Index. That means insurance costs have grown faster than many other everyday expenses such as food, fuel, or clothing. Within that overall rise, health insurance stands out as a particular pain point, with premiums leaping sharply in just the last year. According to official data from Stats NZ, health insurance premiums in the Consumer Price Index were almost 20% higher year-on-year in September. Over a 15-year period, those premiums have surged by more than 200%, meaning many people now pay several times what they once did for similar cover. For families or older adults on fixed incomes, that kind of increase can make staying insured feel almost impossible. Consumer NZ surveys show that about 17% of respondents have dropped their house insurance, but the Insurance Council paints a somewhat different picture. Its figures suggest only about 4 to 6% have let their house cover go, and that roughly 95% of homeowners still maintain a house insurance policy. This gap in numbers is a reminder that data can be interpreted in different ways, and that even a small uninsured minority can still represent tens of thousands of vulnerable households. Chris Walsh from the Money Hub research website argues that, in many ways, people need insurance more than ever. Climate change is increasing the frequency and severity of extreme weather events, and there are widespread concerns about how well the public health system can cope with demand. Yet he says many people are either overinsured and paying for cover they do not really need, or underinsured and exposed in areas they wrongly assume are fully protected. A big part of the problem, according to Walsh, is that a lot of people do not fully understand what their policies actually cover. Insurance documents are often dense, technical, and full of exclusions that are easy to overlook until it is time to claim. That confusion can lead people to cancel the wrong policies, keep unnecessary ones out of fear, or misunderstand the true risks they are accepting. Walsh is also seeing a strong rise in what is commonly called self-insurance. In simple terms, this means canceling a policy and instead setting money aside to cover potential future costs yourself. It can sound empowering, taking control instead of paying premiums to a company, but whether it is wise depends heavily on the size of the potential risk. He says self-insurance has become particularly common with health policies for older New Zealanders. When people reach their 70s or mid-70s, they can be hit with very large renewal premiums. For example, some individuals may be asked to pay around $10,000 a year, and couples can face $15,000 to $20,000 or more. Faced with those numbers, some older people decide to cancel their health insurance altogether and set aside the equivalent amount in savings each year instead. The logic is that if they are going to spend tens of thousands of dollars anyway, they might prefer that money to stay in their own account unless and until they actually need treatment. But this approach is controversial, because a single serious illness or surgery can quickly exceed whatever they have managed to save. Walsh is clear that there are some types of insurance he would not advise people to self-insure, particularly when the potential loss is catastrophic. A house is the obvious example. If your home is destroyed and you do not have insurance, the cost of rebuilding or relocating can be completely unaffordable. He feels the same about travel insurance, where relatively small premiums can protect you from huge bills overseas for medical emergencies or cancellations. MoneyHub's website